everyone. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for July 8th. Well, sterling once again was the loser among currencies yesterday, with the yen being the major winner. That's a classic risk-off combination. The New Zealand dollar, on the other hand, gained after the Reserve Bank of New Zealand said further cuts in interest rates could pose a risk to financial stability by pushing the high house prices even higher. Oil was the biggest mover of the day, though, after the U.S. Department of Energy's Energy Information Agency weekly inventory figures showed a much smaller inventory drawdown than the previous day's figures from the American Petroleum Institute, the API. The EIA data showed a drawdown of only 2.2 million barrels. That's only about a third of the API's 6.7 million drawdown. And apparently people believe the EIA, not more than the API. Now in this graph, yesterday's EIA data is the yellow dot. You can see how small the fall in inventories was, even compared to recent weeks. This is negative not only for oil, of course, but also for the Canadian dollar, the Russian ruble, and even the Australian dollar. As for today's data, we just can't get away from Britain, as the country reports its trade balance today. The deficit is expected to widen all around. This may be alarming, as the capital inflows aren't likely to increase anytime soon. On the contrary, the gating of several commercial property funds in Britain indicates a large demand to get money out of the country, or at least out of its assets. A wider trade deficit is therefore likely to be negative for the pound. Later today, we have the all-important U.S. nonfarm payrolls for June. I'll discuss that indicator in my North American opening market comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.